Good morning, everyone. Thank you for joining for the second panel of day 4, Digitizing Capital Markets with Stock Exchange and Ecosystem Partners. Today, on this panel, we have Tess, Andrew, Neil, and our moderator, Barnaby. So I'm just going to leave it to the speakers and the moderator, Barney, to actually introduce and kickstart this panel. Thank you.
Great, thank you, Nigel, and good morning, everyone. Thanks very much for joining this conversation. It's very exciting to be able to not only keep the conversation through the STACS Showcase week going. So we've covered a huge number of topics already, and today, as Nigel says, we're focusing on the kind of the capital market side. But most importantly, it's fantastic to be able to really dig into some real life experience around DLT and digitization with some very esteemed panelists. So we have Tess from the Philippine Dealing System, so PDS. Tess, thanks very much for joining us today. We were saying before we joined that Tess is the person who's really got the nuts and bolts experience of dealing with DLT so far, and so very excited to hear from you. We have Neil from SIX. And Andrew, who from SBI Digital Markets, but speaking in a more of a personal capacity today, which is probably an important thing for us to kick off with. So today is about, as I said, it's about real life experience, and it's fantastic to be able to draw on the personal, direct kind of contributions of everyone. And so to kick us off, I mean, in the context of personal experience, one of the things we do a lot of research at the ValueExchange around the kind of maturity of DLT. And I think when we did a survey earlier in the year, we characterized this year as being the year of kind of commercialization rather than conceptualization for DLT. So this kind of move into an era of kind of practical applications more than experimentation. And that's a great, I think, that's based on a lot of substantial evidence around how DLT is being used in greater volumes and to a greater scale than ever before. So my opening question, I guess, for each of us is what does that actually scale look like? Where are we seeing DLT as a kind of opener in terms of scale, maturity, and applications in the capital market space? So maybe Neil, maybe you could give us a quick view of where you're seeing DLT kind of come through.
Yeah, I mean, thanks, Barnaby, and good morning. Nice to be on this panel. It's from our side. We've been SIX Group, the Swiss Stock Exchange, and now also as of June last year, the Spanish Stock Exchange Group set about this journey with DLT back in 2018. Very much at the start, it was a project, but in 2021, it's become a firm use case with the regulation of that SDX, SIX Digital Exchange, with FINMA. So we've been really looking at the application of the distributed ledger and how we can apply that to the future of financial markets. As a stock exchange, you've always got to be careful about what's tomorrow look like, or is someone going to come in and eat our lunch? And we felt that obviously with digital securities and the move towards STOs, that we had to be a part of that journey, and we wanted to be early in that journey as well. So for us, it was about the application of that technology, understanding what that means for financial services, particularly our partners, the banks and the financial institutions who will want to connect with what's their strategy. So we got in early. We're very, very proud to have the first regulated digital asset exchange, and we are now really, it's been a huge journey of understanding of how DLT can really help change the model for us. Particularly around the post-trade part, but we're there now. It's a live use case. We're just in the leading the charge, if you like, by trying to onboard now the asset classes that the banks and everybody want to trade in, and this is really what we're trying to drive, and it's that part of the process that we're in. But we're live. We have practical application of DLT, and now we're on to the next step as well, which is expansion into Asia. And setting up the Asia Digital Exchange, which will be a sister exchange going forward, but will run on the same principles of looking at digital assets and actually also cryptocurrencies, but with the back end being very much on a DLT base.
No, fantastic. And maybe just Tess, from your perspective, PDS obviously, is quite specific in its applications. Perhaps you can just give us a quick view of essentially how you're seeing DLT kind of from a kind of real life, from a nuts and bolts perspective on the ground there.
Yeah. No, I think in our case, PDS Group, it's essentially a group of companies providing an infrastructure for the fixed income market. So there are three operating subsidiaries. We have the trading, we have payments, and then we have the post-settlement security services, which is PDTC, and that's the one I'm heading. In our case, and I think it's different in the Asian market. The competition is really more. It's not there. I think the driving and the way we look at DLT is more to see if it's another technology that we could use that could bring efficiency to the CSD. So that was how we look at it. And although we also know with all the discussions about the technology itself will take all the concept of centrality and everybody would be decentralized, and it would put the depositor out of business. So that's one of the driving forces that we're really looking at. It's there, and when we decided eventually to look at it as a technology that we're saying that if indeed it will replace the CSD, why don't the CSD use it as its backbone technology infrastructure in providing the service? But there were hesitancy at the onset because we know you really are, as a CSD, you're in the middle of everything. You're the if ever it is one, all the rest of the stakeholders are connected to the CSD. So if you want to change it, you're totally changing it for everybody. So that's why we're doing it. We're very cautious. And so what we did was really to go on a POC. We know the efficiency that we think that we could get. We realized that it's feasible, but we wanted to test if indeed the DLT as an infrastructure could support the operations of the CSD. As you've said, by itself at the existing infrastructure, we've seen the difficulties, the issues that it would raise with the existing infrastructure, and we know we'd like to test if that could be sustained in the DLT technology. So there are many questions, and that's why I think when you say nuts and bolts, because when we go into this, we really are going it step by step, really trying to understand what's the impact in the process. And I think we go beyond what is the impact in terms of regulations, because most of our rules, this is really going to the very basic now, but this is our experience as a CSD. What would be the impact on the rules on how we conduct the business? It's not only a matter of changing technology, but really the engagement and the rules on how we conduct business, and eventually that would bring us to our regulators. So what we're doing right now, it has all the eyes of our regulator, both at the central bank and also at the Securities and Exchange Commission. They're really looking at it, and at the end of this journey, everybody would really want to know if it's feasible or not, or maybe there's another, you could still use the technology, but maybe in a different approach. So this is the first step that we'd like to take, and I think this being taken by the CSD would be the best approach for the market, because nobody wants to be a guinea pig. So it's with cautious. That's why it's a very simple POC type of concept, very straightforward. We don't want to deal with so many going into using stable coins or CBDC in the process of settling it. Just straightforward using DLT in a CSD operation, and that's for the bond issuance.
Just that. You make it sound so simple, as if it's nothing at all. I mean, I think I always remember as part of the OLAM bond issuance, I remember chatting with somebody who said that the single bond issuance, basically, or bond life cycle, there are about 2,000 tasks that were automated through a bond trade, which is a common theme across Neil and Tess. What you've been saying, that the fixed income is very much the center of attention, it seems, and it'd be interesting to just after Andrew's given us his perspective, just have a quick think about really, I suppose, fixed income versus the rest? Why is it coming to the fore, I suppose, and what's special about that? But Andrew, from your perspective, DLT overall, it's, without zooming in too fast on fixed income, how do you see the overall picture?
Yeah, look, just as a point of disclosure, Barnaby, and morning, Neil, Tess, and everyone. Yeah, look, I'm with SBI Digital Markets, so we're part of the Japanese financial and FinTech conglomerate SBI Group's entity, Digital Asset Holdings, and we are applying for a CMS license to undertake a regulated activity in advisory. So maybe if I say we, it's the royal we, but so look, bearing that in mind, we are applying for our license. I think very, from a very generic point of view, I do hear what Tess has said. Look, I do see DLT, this whole endeavor on blockchain, is basically keyhole surgery, working with the incumbents. So if I could have the kumbaya ecumenical interoperability, so if we can take the concept of interoperability away from just a tech discussion, ideally, at least in the Singapore context, we would want to work with, when it comes to the issuance of digital assets, we want to work with the incumbents such as the Registry of Members, ROMs in Singapore, that's known as ACRA, the Accounting and Corporate Regulatory Authority. We want to work with CSDs generically, Central Securities Depository. So in Singapore, it's the SGX's central depository. So it's very encouraging to hear what Tess is talking about. At least in the Philippines, there's active engagement at the POC level. And ideally, we would have daily reconciliation processes via APIs to the CSD, to the Registry of Members. So that would be the holistic view. But what I'm suggesting is it's going to be a staged approach, even like a phase 0, where you mentioned the OLAM bond, where it was a traditional issue, from what I understand, and then that was replicated digitally. And as Tess says, let's take this step by step, in a phased approach, to say everything's going to be on the blockchain. We all understand the blockchain immutability, but to say, let's go cold turkey, and we're all there next week because, out of the Glasgow COP26, we all have to suddenly put everything on the blockchain because it's green, it's efficient, and there's no more mining. It's all, consensus mechanisms, etc. So let's just take a staged approach. I think further to your point, Barnaby, look, I will mention the D word, debt. I think our conviction, so whether it's the royal we speaking or, what we think from a conviction point of view is that there's potential to great use cases or products, we should be looking at. One's a short-term debt instrument from a supply's perspective, and the reason for that is what we're seeing in the COVID situation and coming out of COVID. There are when it comes to the capital creation process, we need some type of mechanism to help fund entities which are asset rich but currently may be cash flow constrained. So maybe some type of short-term debt instruments on the blockchain could be a valid MVP, for want of a better word, a minimum viable product. And the second one is a simplistic fund structure. So that's the subject of a later discussion today. But I think that's going to be crucial for Singapore. The MAS does release their 2020 asset report. There's nearly $5 trillion in funds here, be them in these new VCC, variable capital companies, or traditional fund format. So I think from a supply point of view, I would suggest short-term debts and funds could be an area which the market should consider. And from a demand point of view, just again, very generically, in my opinion, we are seeing from a investor point of view, a requirement to diversify portfolios to sort of these type of products. So from an access distribution point of view, I believe there is demand. And I think as another generic discussion point, we're seeing a move from leverage and margin products to DVP, delivery versus payments, to so-called cash settled products. So I think, I think it is common knowledge. I read that Credit Suisse is shutting down their, or drastically scaling back their prime services group. So that's a margin business. So to me, that's further evidence of this transition from margin leverage, which I think the regulators are going to keep looking with scrutiny onto a DVP product, so a T0 or even a T+1 settled product. And I think that actually comes out from the millennials who invest in the C word in crypto. So, but probably one of the good things from the crypto world is this acceptance of, if you buy an asset, you pay for it now. No more leverage, no more margin. So I think these key macro points are quite encouraging for the move from POC to delivery of blockchain-enabled regulated products. So regulated,
No, brilliant. Thank you so much. I mean, that's a really clean and very clear kind of breakdown, essentially, of where the kind of, as you said, it's really well put, the supply and the demand side, if you like. I mean, so short-term bonds, basically simplistic fund structures, and then facilitating DVP. I mean, I don't know, Neil, as you listen to that, from to your point about SDX having started out very much saying, okay, this is about fixed income. Be interested to kind of dig into a little bit, because my understanding is different types of fixed income perhaps, but then ultimately also kind of where you see this playing out from to your point, because you guys are gaining experience every day on this, what essentially where you're going, and ultimately what the draw is in terms of the benefits of DLT to each of those cases.
So yeah, thanks, Bobby. Good question. I think from a perspective of STX, we have licenses with FINMA for certain asset types, right? So we got licensed for fixed income and equity. So we look at that, and we look at how do we, to the point earlier about the efficiency on the bond piece, how do we become more efficient? There's it's hugely complex to issue and trade a bond these days. I believe that they managed to, in some projects in Singapore, they managed to reduce that process down to from the many hundreds, if not thousands, down to about 35 steps. So there was a huge efficiency gain of actually digitizing a bond. And I think that, so SIX is user-owned, user-governed. So we're owned by about 122 financial institutions, and it's to them that we work for, really. And they're looking at the fixed income piece to solve first. But that said, when you look at digital asset exchange and the complexity around other asset types, we're not just going to stick with fixed income. We're going to lead the way as well by issuing our own bond on that platform. It's kind of simplistic right now, but we really want to move forward, to the untraded, untradable market, the stuff that's not traded on the secondary market, and that's where the big gains will come. And digital, it's still quite a cold start environment. We are well aware. One of the great things about fitting first is that you're early into the market, but one of the disadvantages is that actually not everybody's ready to use your venue, so you have to kind of adapt your strategy as when the use cases turn up. But without getting quite into the weeds of it, I think for us, we're looking at, well, where's the big efficiency gains, where's the knowledge now, and where do we need to go? So we really want, old end state, it's 10 years away, right? Where we think that the exchange will be fully functional. We will really be trading in all of these currently non-tradable asset types. You talk about real estate, you talk about the commodities market. I completely agree with Andrew that looking at where complexity lies, things like the funds industry, looking at complex products like structured products, for example, there's huge efficiency gains to be made there. And that's really where we want to that's how we'll be successful, is by using the DLT technology to change the game in that, and then bring ultimately liquidity onto our platform. I apologize, I can't speak in great detail about the work we're doing on the bond, because I'm under sort of certain restrictions in that.
No. You obviously got your own commercial constraints in terms of what can and can't be said. But I think for me the key is ultimately is that where I was kind of going is that you've kind of got bonds, and then you've got where you exactly as you said, you've got the unlisted securities, you've got basically bringing new assets into the securities industry, broadly speaking, or certainly to the secondary markets. That is a huge play, and certainly one that's very popular. So I didn't mean to put you on the spot too much, but we got.
I think it's really important. I think I spoke earlier on this week about how distributed ledger or digital exchanges can really change the way that financing is raised, fundamentally, not just for financial institutions, but really for everybody. It's the access to capital. If you can make it smaller, tokenize it, and then actually a great, particularly we were talking about the unbanked in other parts of the world, but based against what was going on in the COP26, etc. But this then really opens up for other markets in the world to get much easier access to finance or be able to finance other projects.
Absolutely, and that is the perfect, almost scripted. It's not scripted, but it was almost perfect segue into Tess, into your experience, because obviously, two questions, I suppose. One is on the theme of fixed income. This theme of simplification. Having gone through it and having tried out the proof of concept, how much simplification, how much change did you really witness with your own kind of eyes? And the second piece is following on really from Neil's point, factionalization and financial inclusion. I mean, do you feel like it's a potential reality based on what you've seen in terms of something that's kind of near term, or do you feel it's quite far away still?
Yeah, I think there is. And although in our case, because the way we're structured, we're really looking at simplification, the process in the issuance, and which primarily involves investor, because our goal is really towards bringing in, as you've mentioned inclusion, is to bring in as to open up the market to more retail investors, because we started with a very institutional type of a capital market, particularly in the fixed income. When you talk about equity, that's retail by itself. On the fixed income, it started with institutional, and then we only recently started, I think, in 2008, when at the exchange side, when all the regulations are in place, then we open up retail, the concept of brokers representing individuals. It grew from there. Now, if you look at our trading composition, almost more than 50% of that is being taken by the retail in terms of number of transactions. But then again, of course, in terms of volume, you have your institutional interdealer trades to be taking up bulk of that volume. So we wanted to tap that market to make things easy for them. One of the things why investors sometimes don't really look at the fixed income relative to the equities, because they find it more difficult to go into the market because of all the paper requirement that they have to go through in the primary issuance and even in the secondary portion. That's where we really are hitting. So we started off with digitalization, and then we've done that, and things we wanted to bring it for the secondary market. But I think one of where DLT comes in is the fact that because of our process, whenever you go to purchase bonds, you would always have to be providing the same type of information. So it's that hassle of having to do that, and where we could provide value that the DLT could provide is that with all of the access to the information, common database, then it could further hasten up the process. Same thing with on the secondary market. So it's the ease and access to the information that we call it, in my mind, I call it like straight through. You could have one access point, and then that takes care of in terms of information. But of course, in terms of transactions, it has to be done separately. But the information flow is faster. From the time it tells its broker that I want to gives instruction to the broker about how to move its security, to the time it turns around and the broker has to enter into the trading platform, all of that should be seamless. And that's where I see that DLT could play a role. But I also have to point out, Barnaby, is that in all of these processes where we are concerned, I'm really talking about connectivity, access to that information, speed in the access of information, which since we're looking at, same as Andrew, we really are not very particular on DLT. It's really more looking at the different infrastructure for you to be able to provide you that service, the end goal that you would want to achieve. So the other side of it is, why not just use API? So those are the things that we are going in through that whole process of this exercise, is for us to see maybe beyond that, maybe beyond connectivity, there's something that we could see. So this is it. And again, I go back. That's a possibility, but then I always go back to the fact that, is it really capable of what they call supporting the nature of processes that a CDSD does.
Mm.
And
Yeah.
I know all that question, if you're in the operation, all those question of batch processing, those are the nightmare that you would encounter even in the existing infrastructure. So will DLT together with the smart contract be able really to address that? So I think that's it. It's always a combination of that two things that we've always are looking at. But definitely it has, even in the equity, maybe on the equities market, it would bring in further more benefits, again, because of that flow of the information. It's a streamline, and all those checking, you don't have to do that, right? All the KYC, you could do it at one point in time, and it's all there. So it's a benefit that it provides into the market, and maybe then provides further investor protection, safety, feeling that information, the integrity of the information that passes through the network.
Yeah. No, look, and that's fascinating, because I think it's both Neil and yourself have mentioned this idea that there's a strong theme of this is a learning process, and ultimately this is all about building experience. And I think one of the things that seems to be coming through that I've seen a lot this year is this increasing distinction between, as you said, information and processing. So, particularly given legal limitations around, tokenization, recognition of tokenized securities versus the underlyings, the idea that derivatives, that bonds and everything actually can be essentially that you can use the information, latency, access, all that kind of stuff, but actually clearing them on the old world, and particularly in the absence of tokenized cash as well, it's a very, very solid first step. And as you say, I think you can realize some quite substantial benefits from just using the information piece without necessarily moving across. But Andrew, to this point about if it's about connectivity, to Tess's point, what are you seeing in terms of the right kind of ecosystem for these projects to succeed? Because one of the big themes of keeps on coming up as minimum viable ecosystem for DLT. And Neil mentioned, I think, that bringing liquidity into the blockchains that are being built out. What are you seeing in terms of the experience that we're building around who needs to be on these, who needs to be part of the ecosystem, if you like, for this stuff to work?
Yeah, look, I think at a conceptual level, just to take that, say, what I think could be a valid minimum viable product, as mentioned before, looking at a rudimentary debt type instrument. So I'm talking maybe zero coupons, just very simplistic, maybe even satisfying Islamic principles, because in this part of the world, Islamic Sharia principles are quite important. So Phoenician finance, 100 minus X. So basically, you pay discounted cash flow. So when you subscribe, you pay basically, you pay less than par for subscription, and then par is replaced. So 100 minus X, that type of structure, and also a simple fund structure. So probably, I think the analogy is Starbucks. You can have any coffee you like. So you can have a frappuccino, a latte, but it's basically made up of two coffee beans, Arabica and Robusta. So I'm saying let's simplify first the whole structure. So just very rudimentary MVPs. So from a supply side, and then if whatever you want to throw into it, it can work. Whether it's ESG sustainable bonds, whether it's Philippine collectibles, where we need to raise funds to preserve Philippine arts, whether it's real estate, trade finance, whatever. Just throw them into the coffee machine, and you just got the two beans, but you could give a multiple of user products. So I think we need to come to some type of consensus on the supply side. From the demand side, yes, like I fully agree with Tess when it comes to financial inclusion, democratizing finance. Then probably I go back to sort of this concept of partnerships, interoperability with the existing financial institutions. I think key is basically access. So in my old world, Delta One products, giving access into restricted markets was key, into saying Korea or India, rather than just trading via vanilla future, which is my background. We had to come up with creative ways to give, say, BlackRock in the US access to India. So similarly here, we need to give, say, a Philippine household access to a green sustainable product, and the way we do that is by maybe sort of looking at DVP type, going back to the DVP process. Someone can buy a product and pay for them in full. There's no leverage, there's no margin requirements. It's not going to be stung the next day because they do something virtuous. They subscribe to a sustainability goal bond, but why should they be burnt? By margin, etc. So I think, on the demand side, I think also there to make it very simplistic. So Tess mentioned API, fine, you can tokenize something, but the tradability, the secondary market can just be done via APIs. How it's settled, whether it's on a PDF file, Oracle database, or on a distributed ledger, a flat file, that's kind of irrelevant. So as long as people can get data via an API, this whole concept of financial conclusion, I think we're onto something. So take it away from bringing it onto lit markets, where people can see a bid and an offer and they can request for a quote. There's liquidity in front of you, rather than sort of, having in dark markets where basically you got to do a phone call. So I think access is going to be key. And I think again, holistically, anything with an ISIN, the International Securities Identifying Number. So rather than hiding these products, let's bring them out to the open. So whether it's a fund, give them an ISIN, a bond, give it an ISIN, and that's the key identifier for every product. Because in the old days, we would say, oh, what's the Bloomberg code for this, or what's the Reuters code for that? It was always a nightmare. They used to call it static, but in my mind, it wasn't static. It was variable. Every time, you'd have a new product code or a new futures listing which changes every few months. So let's just simplify the identification of the product so we can easily distribute it. But I fully agree with what Tess and Neil were saying, and probably the analogy in the Philippines is that we've seen with this AXI token, how basically stock borrowing, rudimentary finance that springs from this basically a gaming token. But imagine that same energy put into proper financial markets, and then in the rest of ASEAN we really do have financial inclusion. So without being sort of condescending, I'm saying that there's definitely the will and the fun and the intellectual capability within ASEAN to have a very vibrant, sustainable financial markets.
Yeah, absolutely. And so I guess on that, I mean, Neil, you mentioned this idea that this is it's a 10-year kind of journey, if you like, that to build out many of the benefits that Andrew was just talking about. It's a journey of discovery, all this kind of thing. I suppose for most of that 10 years, we're going to be dealing with old world and new world kind of alongside each other. People often talk about the cash leg, obviously, and the whole, to Andrew's point, DVP, old world securities or new world securities not being recognized. How do you see people reconciling the two today? Because as much as we'd love to all kind of leap into a new world, you've got two challenges. One is that most of the liquidity is on the old world, and B, that most of the cash is on the old world. And so how do you overcome that, do you think?
Yeah, it's a great point, actually, Barnaby. So there's been different approaches, and I think the approach that STACS have taken is that what STACS exists, it's a financial markets infrastructure, right? So it has millions, if not billions, of access points a day onto its network. People doing big institutional deals right down to small trading, but it's been there, and why are we there? We're there to ensure the stability of our systems, that it's well governed, and that it is basically always going to have the capacity to deal with volatility in the market. Now, that system, technology is designed and linked to that platform, and has been for ever since when electronic trading kicked in the 1990s, and everybody sort of changed there, and that's so this is kind of fixed protocols, what everybody knows. It's the language that they speak. So I think if you're going to change the process and move into the new world of DLT and digital assets, our belief was that we need to kind of do it in isolation. So we set up it's all part of STACS, but it's a separate entity, and it doesn't impact in any way upon the existing infrastructure, because that's tried, it's tested, and everybody can trust in it. What we did is then we said, okay, let's build out in a separate entity and look at it from a blank piece of paper, basically. So we're not restricted by the technology that we already have, and some of that technology is very is well established, reliable, but it isn't going to work well if you throw a DLT in the middle of it, right? It will cause huge downstream issues with our major banks, and they're not going to thank us for the multi-million-pound projects they need to write to that. So what we're saying is the worlds are going to run in parallel right now. So basically, let's keep the new world of digital assets separate. And if you wish to issue a digital bond, or if you wish to do a replication of both, then you can, or whatever digital asset that you may wish to do going forward. But it will then, I think there will be a migration. You talk about 10-year landscape. I think over the next, there'll be an exponential rise, but I think in the next few years, you'll see people start with, or let's experiment more, let's do, it won't be POCs, but it'll be live examples, but it'll be small. And as people become more comfortable with that process, then the systems will adapt and adopt to it. And eventually you'll see that we won't talk of digital securities as digital securities, just as securities in a digital format, but it will take a while. It's a big journey to go on. And it's great to be part of that story because its use case could be much more expanded over the current model. But and then we talk about interconnectivity, STX with ADX, other digital exchanges around the world is the big vision. And it's great to be part of a big vision, but we have to take it one step at a time. And for us, it's currently walking in parallel paths so that we don't upset basically the existing infrastructure, which works well. If I'm not serious.
No, absolutely, and it's not entirely inconsistent, Tess, with what you were saying in terms of, look, we don't want to be, you can't. Most clearinghouses, CSDs, and exchanges around the world have said a similar thing, that you can't take the regulatory risk of putting your CSD or your CCP as the guinea pig of a technology, no matter how controlled it is. And so, Tess, to the point that this idea of old world and new world, where do you see this kind of playing out in terms of what you've learned from the proof of concept? How do you see the two interacting? Do we talked about the whole information versus kind of clearing, kind of settlement layer separation. How do you see those kind of progressing over time? Do you see them kind of crossing over? Do you see it as a connectivity question?
I think, same thing as what Neil said, and this is how we even implemented it. The way we would see it, because of the fact that you cannot bring in all at the same time the buy-in of everybody. You would definitely have one or two issuer. For example, if you talk about the bond, you would definitely have one or two issuer there who would really want to try the product. And then in the process, what will happen there is you will work with that issuer, but then again, it could be for you to be more efficient as an CSD or as an infrastructure. The way I see it is that if you really want to venture, you have to be something on a product which is really separate from your vanilla type of product, and then go into something the ones that, maybe exotic's not the part, but if you want to experiment a product, maybe that's where you would use the DLT. Because what I'm saying is, at the end of the day, whatever it is, the functionality of the CSD, you still have to calculate all those basic things. It would still be there. But then, if ever something would happen, you could get to isolate that for that specific product. In terms of information, it would still be there. But the requirement of people to be joining your buy-in, you tend to do it by portion. You don't have to bring everybody in. You don't have to worry with all of the, as I've said, the composition of the market is very heterogeneous. So you never get to make the first step if you want to bring in the existing type of product and migrate them into the new technology. I think it's best to, if there are, like in our case, sometimes you would think of, this is a new product, this is a new type of a bond structure. Then I think that would be the best type that you bring in and then you onboard it, because in the process you get to start with the documentation, start with what would be the regulatory things that you have to do. Then you start discussing with your, because, well, when you start doing that, you get the structure, then you think about how do you settle this. Now I have to talk about the settlement bank. Now when you do corporate action, what are the things that you have to do? So you get to work with a very team of stakeholders, wanting to enough time to spend to it, but at the same time it does not disrupt the the workings of your well, legacy, for the lack of the word, no.
No, and it's interesting actually. Just when we did a large kind of global survey on DLT usage this year, actually with ISA, the International Securities Services Association, also Swiss. It was very interesting that the single biggest area of DLT deployment was exactly as you said, Tess. It was new things. It was basically new revenues, new products, and trying very much to, everyone kind of acknowledging that we'll come back to the kind of the core at some point in the future, as it probably somewhere between 3 and 5 years away. But ultimately, the near term of DLT is basically new stuff, exactly as you said. So that's very consistent with a lot of the feedback that's coming through. But Andrew, you know, I've tried to hold it off for 42 minutes. Interoperability, you mentioned it twice already. You know, one of the frustrations that I hear a lot is particularly from fund managers saying the problem with DLT is everyone's gone and experimented, everyone's gone and built their own little blockchain. Liquidity is fragmenting so fast. Whatever liquidity does build up is just being trapped in all of these different blockchains around the world. How do you see that kind of playing out, if you like? I'm guessing you have a strong view on this, maybe.
I do have a strong view, but I think just to sort of take back a step and just to echo the previous points, I think key is regulation. So I think we now should have come to some type of consensus, in my humble opinion, that you know, whether you're into DeFi or to CeFi, basically there needs to be some type of regulatory framework, because what we want to see is investor protection. So just focusing on this region again, you know, you've got 600 million people in the ASEAN, Southeast Asian region, and I would suggest coming out of COVID, there's definitely going to be some type of funding requirements, you know, even as dramatic as, say, emergency funding requirements. And then we go back to those two MVPs, you know, we're talking about a very rudimentary debt product and then a very rudimentary fund product. And I would also suggest from a technology point of view, we should look at relieving any operational sort of impediments, you know. So for example, in Thailand, you know, potentially you can trade electronically, but the bonds settle on the 8 different repositories, you know, it could take 12 days. So I think we got to, so what I would say to the asset managers, there's definitely a supply requirement in Asia, which needs to be fulfilled by public markets. I would say to the panelists here, you know, we cannot continue to rely on solely on US asset managers' allocations to this part of the world, particularly if the Fed's going to be winding back QE. Basically, this part of the world cannot participate in QE, you know, because it's just the way the various central banks operate in this part of the world. So basically, the funding for ASEAN needs to come from the public. So there's definitely a supply requirement here. And on the demand side, look, you know, people talk about the so-called, of the 600 million people, there's 25 million Henrys, you know, as to borrow that expression, you know, high earners, not rich yet. So there's people in this part of the world who are becoming wealthier and want access to regulated, sustainable products, you know, basically non-scammable products, you know, which have the purview of regulators. So to asset managers, I would say, stop complaining. You need to get into this, you know, whether you're catering to high net wealth, to hedge funds, or to mums and dads. Otherwise, you will, this is me speaking personally, there'll be new innovators coming to space. So it's probably, I'm just speaking here, you know, individually, but it's no surprise that Grab has a PSA license, and there's no surprise of the prevalence of that annoying ad, download Moo Moo, where you can look at directly accessing funds, and their parent company in Hong Kong called Futu Bull. Basically they've got about 100 funds listed on their app, from UBS to Harvest, basically touting direct access. So I think from a fund manager perspective, I wouldn't keep looking at potential impediments when it comes to operations. I'll just be looking at what the market and what the region is telling you it needs. So it needs funding, and it needs the people in this region to increase their wealth and to have access to these products. And sure, whether it's via fractionalization, sure, I'm not going to go and buy $100 million sukuk, bond in ringgit. But if someone comes to me and says, hey, for 1,000 ringgit, you can participate in a green, sustainable project, sure, I'm going to look at that. So it comes back to what Tess was talking about, a pathway to sustainability, but that also includes financial inclusion and the democratization of data and access, et cetera, et cetera. So that's probably my broad response to asset managers who may be complaining about, it's just too hard. I think you just have to get on board in this part of the world. In America, fine, you've got very advanced capital markets. You maybe don't need to do that. But if I'm a fund manager here, I need to consider these dynamics.
Yeah, no, it's a fair point. I mean, ultimately, there are different challenges in different parts of the world, and I mean, ultimately, I think it's a good thought actually that the interoperability challenge is most often leveled at people in Europe and North America, actually, just because that's where the proliferation of blockchains is happening. Really, I mean, outside of Singapore, that's pretty much that's where the large concentration is. But curious, actually, one of the other points, Andrew, that you mentioned was the extensions of, I mean, not meaning to make this all about bonds, but the extension of the kind of the fixed income space. You were saying short-term debt, but also you mentioned sukuks. You've got green bonds. You've got all of the kind of data-heavy bonds or self-referential. Basically bonds that are much more about just the paper they're written on. I was just curious to see, Neil, whether, as part of the overall kind of, as you speak to investors in Asia in particular, in terms of where the pull is, whether those asset classes, whether you're noticing that they're coming up whether you're noticing them come up, I suppose, ultimately, because most of the research seems to point to the fact that actually those are, they're technically, a sukuk is brilliant, or DLT is brilliant for a sukuk, it's brilliant for a green bond. Is that an area that you're seeing a strong amount of pull in?
It's interesting. So as part of ADX, Digital Exchange, we spoke to about 80, well, maybe more now, nearly getting on towards 100 different types of organizations. So interesting to Andrew's point about asset managers, they were highly engaged. I think they are looking to what he's saying regarding the democratization and getting more financial inclusion in the market. But what I think when you look at it from green bonds or ESG perspectives, what's the application of DLT? It's absolutely vital for financial organizations to fulfill that mandate now. I mean, I don't think they can just look at the way that, I mean, I speak to a lot of wealth managers as well, and we talk a lot about the passover of wealth. I mean, I was in a part of the FinTech festival on Sunday evening. Actually, I was at an event with the CEO of Bank Julius Baer, Philip Rickenbach, and he was saying that the number one driver there's about $1 trillion in wealth about to pass from one generation to the next at any time. And then you look at I'm not a big fan of using the word millennial, but when you look at the change, but when you're looking at the changing appetite of people, so it's not, I don't think it's just about millennials. I think it's much more inclusive than that these days. But when you look at the changing investment style that people, what's their decision when it comes to investment? Is it just capital returns, or is sustainability a big factor? It clearly is, whether it's by force or by actual just by sentiment or wish to do that. And when they look at the DLT and issuance of green products, so green bonds, green funds, anything, the DLT very much lends to that application. And I think we can really see that being a driver for the sustainable agenda. And when we're building out the Asian Digital Exchange, we're very much conscious of that. What is its ESG credentials? How can we ensure that the banks can support their strategy, or asset managers for that matter, support their strategy through us? So a bit of a high level answer yet again. You probably noticed there's a theme. I'm not going into the details, so apologies for that. But the overall sentiment is that this DLT, and actually the way that we finance via mass market, whether that's on the what we call democratization piece, will lend to a green future, because it will be driven by the mandates of governments, regulators potentially, and also by the fact that the market will request it. And this way, it will really give you, because you can fragment, you can get a much better picture of what people want to invest in, because there's more people using the platform.
Absolutely. Okay, brilliant. So thank you.
So maybe just quickly, just to echo that, just probably the flip side of the green issuance imperative is I don't want to go down the rabbit hole, but it is carbon trading. So and potentially blockchain has a use there where you have electronic trading, just via a matching engine, but behind the scenes, maybe blockchain comes in as a settlement mechanism. And the big kicker there is going to be mandatory carbon offset trading from Europe from 2022. So it's almost hand in glove, but just as a headline, macro.
Yeah, I mean, honestly, I think for me, voluntary carbon credits is basically one of the biggest areas of DLT. And as much as there's a crisis of confidence, there's greenwashing, there's all the wrong things going on at the moment, and there's a desperate need for any kind of platform that can carry with it information about the project that basically is withdrawing the carbon from the atmosphere in the same body as the security, and hey, look, DLT does that wonderfully well. So no, I completely agree. It's a huge area, and I think for me, I'd stop short of it, because we're kind of it always falls awkwardly. It's not really fixed income. It's not really a commodity. It's just something else out there. But ultimately, for me in 2021, it's been the biggest growth case in terms of, you look at CIX in Singapore, you look at there are about 7 or 8 projects that have been launched this year pre-COP26, and I'm sure many will come off the back of it now that there's maybe there's more of a rule book than there was 2 weeks ago. We'll find out. But But just so thanks for pointing that one out. And I'm conscious we've got about 7 minutes left. So if anyone does have any questions, I don't want to monopolize the panel. If anyone does want to ask any through the, presumably through the Q&A function on the right-hand side of at least my screen, please do send them through if you have any, so that we can make sure that we get all your questions answered before we run out of time. In advance of that, Tess, I've got a question. One of the things that another big theme of this year has been T+1. So this move to, basically off the back of my interpretation, off the back of, huge market volatility, enormous balance sheet constraints by having to lock up capital for 2 or 3 days, depending on the settlement cycle of the market. This desire to move obviously in the US has been very public, but also India, Hong Kong, other markets around the region have had a look at it and have communicated on it. There's 2 ways of thinking about DLT, of T+1. One is that you just run a bit faster on your old kit. And second is that you get new kit and kind of use it at the right speed. I was just curious from your perspective, how do you see the whole kind of, I suppose, the whole DLT and T+1 thing playing out, without meaning to give away, too much, but do you see that one is a necessary part of the other?
Well, I think I have to explain where we're coming from. The way we settle bonds in the Philippine market right now, it's T+1. So essentially, to that extent, that's not really an issue. But I know that because when you talk about local settlement is not an issue. But I think at a certain point there are because in the equities market it's T+3, but only in the fixed income market that's T+1.
Yeah.
And then and of course there are issues there because, well, that's how the market settles. But because there are we still have foreign investor custodians. And that I know that for some they do raise it, that it's a hurdle for them to really in compliance for the T+1. And that, I think, a part of the issue there is that with information, the way the reconciliation that has to happen at the back office, that all those things that it makes it difficult for on the custodian side, the foreign investor to catch up with the T+1. But right now in the market, that's how it is. And then we don't really have much of a problem there. But I'm sure that it could help. DLT could play there. The concept of connectivity, I think I don't have to focus here on DLT.
Yeah.
But the concept of connectivity, it could be, although we do have it now, but I think there are still things that we need to enhance there. The way information are being communicated between the custodian, the intermediary, and the CSD. But again, I think I don't see that it really DLT has to be there. It's just that if we could come up with the connectivity there, the SWIFT, but in the Philippine market, the CSD doesn't really use SWIFT. No? So it could be, but it could be through SWIFT, it could be through an API, so that information could be immediately made available. It could be DLT for that information to be readily made available for the custodian, and the custodian to turn around with their investors, and for all the settlement details to be made to be prepared, such that on settlement date they'll be able to settle at T+1. So I think that's what I could say, as much as that's
brilliant. Thank you for that. And I should have said at the beginning, actually, I realized as soon as I said that, actually, I was talking really more about equities, which is a bit unfair to ask you of Filipino equities. But so, I think for me, if you look at the Synapse experience in Hong Kong, I think the value of, they've basically gone and done exactly the benefits that you're talking about in terms of information synchrony, removing the layers, basically making sure that everyone sees the same information at the same time, smart contracts then running. There's a clear enabler to what is ultimately there at T0 settlement, obviously, for Asia. Brilliant. So thank you. I don't think we've got any urgent questions. I'm sure people are waiting to probably sneak a question on email to you. But maybe to close out, I think for me this question of a journey consistently comes up. The themes that we've talked about today: learning, a journey, not wanting to be the guinea pigs, trying new things, additive things as opposed to core things. I suppose ultimately, if you think about basically the next 12 months, what are the big, the big things that people need to be paying attention to? We've got, people listening here thinking about, how do I do DLT? How do I, either am I a participant, an operator? What are the big kind of considerations that you think people need to have in their minds for the next year about making DLT work in their own environments based on your experience? I don't know, Andrew, whether you want to kick us off.
I think just keep the thought process relatively simple. I would suggest personally just to look at a macro theme. So at least globally, there seems to be a consensus, at least between the friends of China and the US, just overnight. When it comes to climate and the implications of climate, into green issuance, what we talked about, and as Neil's alluded to, maybe the optimal way for a green bond would be onto blockchain. So basically, if it's going to be green, we don't want pieces of paper flying around. Otherwise, our friend Greta Thunberg is going to get very angry. So if it's green, that's fully electronic from issuance all the way through to distribution. So I say just look at the global macro. G20 announcements, OECD announcements, IOSCO, the International Organization of Security Commissions. We need to look at the regulator. We need to look at regulation. I think gone are the days where we can just think, hey, I'm doing this on my own. I think the regulators are going to, the ambit of the regulator will be there. So, and also I think we need to look at the synergies between CFI and DeFi. I think they're mutually interoperable. There we go. One more time. I think there's some great concepts from DeFi when it comes to price discovery, which can be ported into the existing financial world. And again, what's happening in Philippines with gaming tokens, how there's basically a whole financial ecosystem on borrowing, etc. It's great. There's this sort of from a bottom up level. There's there's already sort of activity happening in areas which we didn't think about. And I agree with Neil. Maybe we shouldn't use the term millennials, but let's just be conscious of new applications and new distribution channels, such as hypothetically Grab, etc. So I think let's just keep watching. But I personally think that yes, those two areas of a rudimentary debt product and a rudimentary fund product are going to be at the forefront, or should be at the forefront of ASEAN discussions for this year. Because it comes back to the funding question. This region, I mean, selfishly looking at this region, forget about America, forget about Europe. Capital needs to be raised, and then what's the best mechanisms to do it? And I would suggest blockchain, T0 settlement, DVP is going to be key. Yeah.
Brilliant. There you go. Thank you very, very much. Neil, from your perspective, big build out, in terms of, off the back of all the feedback that you've gathered, what do you see as the big learning points that people need to, or big considerations people need to have in mind for 2022?
I think it's really, don't operate in a vacuum. Speak to as many people as you can. Make sure you really understand what are the factors that are going to impact your project. Andrew talked about regulation. How do you comply with regulation? Obviously, MAS have issued the PSA license for crypto, but also then there's the other licenses around RMOs and CMS licensing that you would require. But speak to the community. There's a lot of people who be surprised at doing similar things to you, where you can, you don't need to build it from scratch. You can, form partnerships to leverage other people's technology. I really see that there's particularly in ASEAN, there's so many bright young minds out there who are coming up with some mind-blowing concepts of really driving the technology, the future of finance, if you like, and because they understand the pain. So speak and listen to as many people as possible. Make sure probably conscious of what I'm saying on this call, but make sure you need DLT, or if you do need DLT, make sure that you can use it in the most effective way possible, that your use case is applicable, and that the people who are going to have other use cases that can bring it onto your platform. Because many times these projects will fail because actually you're trying to put technology on. They're trying to use technology and create a problem, but make sure you're always solving a problem. I think that's the critical piece. But for us, I think just listen and communicate as much as possible before you embark on one of these projects.
Brilliant. Thank you very much. No, it's a fundamental point. Thank you. Tess, from your perspective, you've been through the POC. If somebody else was starting out another POC tomorrow, what would you tell them?
Well, I think the basic as first thing that you need to know is try to understand what the market needs. I mean, yeah, there are technology available there. You have then there are regulations, but before you venture out into that, try to understand what the market needs and what are they first ready to take in. Maybe it's a good DLT is a good one. It's the in thing, but and then look at your time frame. What exactly do you want to achieve? If you're looking for in a span of 2 years something that you want to launch, maybe you have to think it over. If it's something new to the market, 2 years might not be enough for you to do that. Depending on your venture, but I think, as I've said, what is it that you want to do? Look, what's the need of the market, and what the market is. What are the behavior of the market? You try to understand. You look at the regulatory environment, and then you start it from there. Because I mean, it's always good to come up with a product, but then if the market is not ready for it, you have the proper regulation. You know that this is the trend going forward. But if the market is just not ready, the market that were you in, if that's especially the investor, well, depending on what you're targeting, then it won't fly. I mean, that's true for any innovation or for any initiative that you would want to take on.
Brilliant. No, thank you. It's ultimately a very consistent point, really, around, ultimately the oldest thing that was said about DLT was it was a solution looking for a problem. And I think, basically being very clear on the problem statement. We actually have, I'm pretty sure we have Nigel on video last year saying exactly that. So there you go. STACS said it first. But but thank you very, very much for a really, really, as far as I can, from my perspective, very coherent, very clear set of kind of description of the journey. So thank you, Tess. Thank you, Neil. Thank you, Andrew, for running us through this. I'm sure you guys are all available offline for any questions that do come through. And I look forward to seeing how we all get on in 2022. Very exciting. Thank you.
Thank you too.
Thank
Thank you. Thank you for the opportunity.
Thank you. Thanks, everyone.
Thank you. Yeah,
Thank you.
thanks.
To let everyone know, there is a panel that just started on digital banks as well. It's with Standard Chartered, UBS, and OCBC on the future of digital security. So please join them as well. And thank you for supporting our panelists today, Neil, Tess, Andrew, and Barney. Thank you so much for today.
Brilliant.
Thank you.
Thank
Thank
you.
you.
Thank you.